All right, so the same thing is happening again that happens at every single intermediate cycle low. People are becoming convinced that a bear market has begun, or that a 1987 crash is starting. You know, it's always the same. Um, Human nature never changes, so the same thing happens every time we have one of these corrections. Back here in February, everybody was calling a market top. I said at the time, it's just a normal profit-taking event in an ongoing bull market. Uh, Obviously, I was right. Same thing is happening here, just a profit-taking event in an ongoing bull market. Um, Bull markets don't top like this. They don't just crash from from a top unless it's a huge parabolic move and the market is stretched 60, 80, 100% or more above the 200-day moving average. And obviously that's nowhere near the case in the stock market right now. um, you can get a crash from the top, like in something like Bitcoin. Now that kind of a parabolic move that can crash in a top, but a market that is rallying naturally is not going to top this way. At the at the very least, you could get some kind of a crash event, but then you would have either a double top or you'd form a megaphone pattern as the governments try and fight the inevitable. I'll say it again. This is not how bull markets top. They top either as a double top, a rounded top over many weeks or months, or more often than not, they top as a megaphone pattern as the government tries to uh, fight the fundamentals that are trying to pull the market down. But we don't have any of those fundamentals in place yet. In order to have a recession, we've got to have a spike in inflation, and that means we need oil to rally, at least close to 100% in a year or less. So there is no catalyst for the stock market to end its bull market, and I don't think there's a catalyst even yet at this point for the 4-year cycle to top. And again, I don't even think that the 4-year cycle top would come in this kind of a pattern. So we just have a completely normal, actually run-of-the-mill 50% retracement of an intermediate rally. Nothing out of the ordinary right here. The only thing that is unusual is the speed with which it has unfolded. And there's, of course, there's a reason for this. A normal intermediate cycle decline should take 4 to 6 weeks to play out. And that's what has been happening in the Russell. But the problem we have is in our modern managed markets, stocks get propped up longer than they should. The market was, in reality, we probably should have formed our intermediate top, right in here, end of July, early August, and then, unfolded into this intermediate correction over a period of 4 to 6 to 8 weeks. And that would have been a normal correction. The problem is that you have the Jackson Hole Symposium here, so the market couldn't be allowed to continue down ahead of that event. And then again, as the market tried to top and roll over here, you got the same problem. You've got the Fed needing to hike rates again in September, and they can't do that into a declining market, so the market gets propped up again. So what happens is they force the intermediate degree correction, which should take a minimum of 4 to 6 weeks, to unfold in a matter of days instead, and that's exactly what we've had here. And then when investors see this, emotions come into play, and logic goes out the window. And if traders were thinking logically, they would realize that this is not how markets top. This is how corrections that have been propped up for too long. Uh, this is how the profit taking event unfolds. So, I'll say it again that this is not the end. We've got a trip to, 10,000 or at least close to 10,000 before this 4-year cycle tops. And this is just, nothing more than an ordinary run of the mill 50% retracement of an intermediate rally. And I'm going to be watching over the next few days for some wild whipsaws that would be an indication that the bottom is forming. Maybe it looks like we're going to have a rally today, and then maybe a quick undercut of this on Monday or Tuesday. So we want to see some similar action to what occurred here in February. Some kind of a rally, and then maybe another quick undercut, and then I think we'll have our bottom. And then this will set the stage. It has mostly cleared sentiment already. Retail traders have already become excessively bearish, just like they were back here. The intermediate optimism sentiment levels, again, very bearish already, after only 7 days, same as they were back here. So we are building the fuel for the next rally. This semi-crash here built the fuel for this rally, but we needed to go sideways this year because we had a very big long run from the election to this top, and so we needed a period of sideways consolidation, and that's what 2018 has been, is just a period of going sideways and really going nowhere. But I think that is going to be done once this ICL is finished, and then I think we're going to have another big trending move in 2019 that'll take the NASDAQ to that target or close to the target of 10,000, and certainly the S&P has to get above 3,000. We're not going to get that close to 3,000 and not eventually get there. So over the next few days, I think we're going to be looking for a similar bottoming pattern as what we had back in February. And then once we get that, then I think we are off to the races into the end of the year and at least halfway through 2019.